what's missing for a lot of payments companies and fintechs that are trying to leverage this new world of stablecoin-based payments is some unified liquidity and orchestration layer, which is effectively what Borderless is.
That's Kevin Lehtiniitty, founder of Borderless, a company simplifying payment settlement, all with stablecoins. Before Borderless, Kevin's built and architected some of the world's first issuance and regulated global financial systems using stablecoins, and he's now bringing that experience into his work at Borderless. In this episode, we dive into the unique challenges of exchanging between fiat and stablecoins globally, how Stripe's recent acquisition of Bridge has accelerated their business, and the unique approach to aggregating a liquidity network of participating financial institutions, what they call PFIs, into a single API.
Season 1 of Stableminded is brought to you by Layer 1, powered by BVNK. BVNK has been at the forefront of stablecoin payments for years, and Layer 1 is their latest innovation, designed for businesses ready to harness the power of stablecoins. Layer 1 is self-custodial, global, and takes the hassle out of managing payments across multiple chains. It's the same technology BVNK uses to run their own operations that they've been developing in-house for years. Next season, we sit down with Johannes Kask, Managing Director of Layer 1, to talk more about it. So stay tuned until then. Kevin, how are we doing?
Hey, Drew. I'm doing well. How are you?
I'm amazing. Thank you so much for deciding to join the launch season of this podcast. I'm super excited for this chat.
Thanks for having me. Sounds like it's a season of some pretty serious guests, and I'm happy to be included.
Only the finest for the first season. First off, just thanks for being here, and thanks for being just a great partner on the Stable Studios side of the business. It's been really fun to work with you. I wanted to start just for people who might be listening to this for the first time. Stableminded is a podcast really focused on people who might be entering this conversation for the first time. People, maybe they run a business, maybe they're a part of a business, or they themselves want to be a part of the payment flow of stablecoins, maybe saw the acquisition in recent weeks of Bridge by Stripe. And so this for us, we're trying to make this as high level and easily digestible as possible is the goal. So with that being said, would love to hear just a quick intro on you, your name, what you're working on, and a high level about Borderless to start.
My name's Kevin Lehtiniitty. I have the honor of leading the team at Borderless XYZ. And, fundamentally, I think what we've seen over the past few years, and especially more recently, it's certainly accelerated, as we've seen the rise of what we call stablecoin-enabled financial institutions, or stablecoin-enabled FIs. And this can be the Bridges of the world, Bitsos, Yellow Card, BVNK, Ripio. Like, these are kind of the brands that come to mind when you think about a crypto or stablecoin enabled financial institution across different markets, right? US, Europe, Africa, LATAM, Southeast Asia, etc. And, we think that this represents basically the next generation of banking over time as more and more assets move on chain. And what's missing for a lot of payments companies and fintechs that are trying to leverage kind of this new world of stablecoin-based payments is some unified liquidity and orchestration layer, which is effectively what Borderless is. So if you want to start to facilitate global payments today, you need to go and have both technical, business, and operational relationships with 5, 10, 15 of these different, stablecoin-enabled financial institutions around the world. There doesn't exist something like a VisaNet where you can have a single access point that gives you this global liquidity through these FIs. And that's probably the easiest way to think about Borderless. Borderless is a one network that supports, consumer and business payments, first and third party payments, collections and payouts. And we ourselves are not a financial institution. We are a software layer. We are an orchestration layer. And the network is made up of what we call participating financial institutions, or PFIs. And the PFIs that join the Borderless network are all licensed in their local jurisdictions. They have access to all the different banking rails. They provide the stablecoin into local fiat liquidity, the FX, all those things. So if you're building a fintech or you're building some sort of a payroll application, payments application, etc., you can focus on your core business, which is the payroll application or the payments application, things like that, and not managing a global pool of stablecoin liquidity. We effectively do that as a service through the network.
Incredibly well said. I feel like you and the Borderless team, from the outside looking in, you might be, wow, this is like the perfect thing to be building at the right place, the right time sort of vibe. But I know that you have been, especially in recent years, really preparing and building a lot and involved in a lot of really exciting things. And I don't think that would be fair to you to say like, oh, they just kind of got lucky. They're here. How did they really found this at the right moment? I'd love to dive into everything you just said. But before that, give us a background on how you got here, specifically in this context of this problem, the aggregated, global liquidity for stablecoin problem. How did you experience that? And how did you arrive at this?
I think, I didn't know it at the time, but by just kind of basic family background, my parents and I moved to the US when I was 6, which when you're 6 years old, you don't think about payment problems. And I'm not trying to pretend that I did. You think about the Batmobile and when you get to go to recess. But one of the things that was interesting is that I moved with really just my parents. So if you think about grandparents and uncles, cousins, etc., the rest of the family is effectively all back in France and Finland, and now the US and Europe are fairly established corridors, right, for remittance and for FX. So there's not necessarily a ton of problems to solve there, but it gets you kind of used to growing up in a way where cross-border transfers are a part of your normal kind of everyday life versus, most Americans, I would say, that don't really experience the frustrations perhaps, of having to send money abroad or to different regions of the world and like the settlement times of SWIFT and the fees and things like that. It's tricky when your grandparents want to give you like $20 for your birthday and they have an EU bank account and you have an American bank account and, you end up going to some sort of a closed loop intermediary like a PayPal to go and make that transaction happen. And in the back of your mind, it's like, okay, well, why does this, have to run through this kind of, well, PayPal's not really a startup anymore, but why does this have to run through a tech company? Like, why doesn't this actually happen within the financial system itself, right? Why isn't there a way to make these transfers? So that's perhaps important context. And then, fast forwarding, I started working on stablecoins in 2018, helped launch, I think, TrueUSD, which at the time was kind of the first fully collateralized US-based stablecoin for dollars. It was kind of TrueUSD, and Tether was the incumbents, and at the time they were storing all of the collateral that was backing Tether and I think corporate accounts in Hong Kong. With TrueUSD, we were using trust accounts in US trust companies that were doing periodic audits of the assets and things of that nature. And then ended up building out a stablecoin as a service platform in 2018 as well, and had, I don't remember the number, 20 to 30 probably stablecoins live on the stablecoin issuance as a service platform. And, kind of heralding 2019 was going to be the year of stablecoins, and crypto applications and use cases were going to go beyond speculation and start going to payments and tokenized real world assets and all those things. And, clearly didn't happen in 2019, was 5 years early to that party. But have always been a big believer in kind of the transformative value that stablecoins could offer. And I was the technical co-founder, chief product officer type roles at both Prime Trust and at Fortress, which were very interesting experiences, where you had kind of from a product standpoint, you had phenomenal product market fit, you had hyper growth, billions of dollars of transactions every month flowing through each of those companies. And then for reasons that I don't think are fair or appropriate for this to be the forum to get into, both of those companies had some fairly major setbacks. And one of, I think, the themes with Borderless, and one of the reasons why I decided to take up the founder seat this time instead of kind of the technical co-founder or CPO, CTO seat, was having seen what impacted both these companies from the inside, kind of taking the driver's seat this time to be able to build the right infrastructure for payments, hopefully without the poor decision-making that led, or the greed or the kind of other influences that led to kind of the collapse of the two others.
Yeah. So going back to the first comment of your family moving to the US, you have a personal connection to this. You've seen, and I think that, just to be said, is something the US, for people who grew up like I did in the US, from the US, the whole family's here, we're not as familiar with those problems. And I think the rest of the world, though, is, and it's something that I think a lot of us who might be from here or may not have family across borders or do business across borders regularly, that some, especially in the business community, people who are now heads of finance or managing treasuries or starting their own companies, and those companies are operating at a global scale, they're starting to realize, oh, wow, like I had no idea that what you and your family had to go through with the traditional model was there. So how did you guys solve for that? You mentioned PayPal. What other, like when you say that, and for people who may not be familiar with that issue, break that down. Like what historically to send money from Europe to the US or vice versa, practically, what has that historically been like for people?
There's a few different rails kind of depending on what you do, but primarily those things happen through what's technically a messaging protocol, but let's just pretend it's a payment mechanism that's known as SWIFT. And SWIFT transfers are basically kind of the way that international wires are made. The transfer typically goes through kind of correspondence or multiple intermediary banks. I grew up in Indiana. The bank that I used to use is not what's known as a SWIFT member bank, which means it doesn't have direct access to this SWIFT network. So funds and in France, my grandparents live in a small town on kind of the northeast side. They don't live in Paris or kind of another major city. So their kind of local quote unquote credit union type entity is also not a SWIFT member bank. So the funds and kind of the way the transfer flows is it goes from their local bank to, I don't know exactly what the bank is, but one of the major French banks that is a SWIFT member bank, from that major French bank then to whoever the kind of corresponding bank is on the US side, and then from that bank on the US side to my bank. So in order to enable like that transfer of funds.
Yeah, you think about it like this is international airports, you know what I mean? Like you have these domestic kind of smaller
basically,
airports.
You fly to the hub and then you go hub to hub and then you go to, that's
so if you don't live in Chicago or San Francisco or New York, then you're going to have to fly there if you want to fly to Europe, essentially.
Okay. And just like that, kind of these layovers when you're flying add additional, time to your transit. The same thing happens with money movements. So, the funds would take 3 or 4 days to get there. And quite frankly, it's just cost prohibitive. Even my bank would end up charging, I think it was $30, $40 to receive the transfer. So in a lot of ways, kind of at the retail level, right, at the bigger B2B level, $30, $40 is less of a fee issue if you're moving $10 million. But if you're trying to get, $50 for Christmas or something like that to go buy something, that doesn't quite work. So we ended up, running through PayPal accounts. And when Amazon started to become more popular, actually Amazon also became a lifesaver. Because then you could just kind of like order whatever the gift was from Amazon. You could pay for it, with your credit card back from France, and it would arrive 2 days later with before kind of the rise of Amazon. The other option was like, okay, well, if you buy something in France and then you ship it, great. That's another, $50. Ship a Batmobile over, and that takes like 2 weeks and all those things. But it's my wife grew up very differently. She's from St. Louis, or kind of the Illinois side of St. Louis. If she were on this podcast, she would immediately have corrected me. And I know, Drew, you're in St. Louis, so maybe you understand that for her, it's a very big distinction. And all of her family lives in the US, and she never had to deal with any of this until we got married. And then a bunch of, kind of my family is like, hey, like, how do we send you a wedding gift and things of that nature? And now I think that was solved mostly through Revolut. Revolut's done a great job of kind of having these multi-currency, I don't think they call them accounts. I think they call them something else. I'm not, a day-to-day Revolut user. But you're able to hold your dollar balance and your euro balance. It says you can have kind of these multi-currency accounts as a regular consumer. And that's actually been really helpful. But it was interesting to see her get thrust into some of this world and have to figure some of those things out, coming from that other background you mentioned where she's, never thought about international money transfer before.
Yeah. And true innovation, I mean, I think what's beautiful about this is true innovation happens whether or not you know it's going on or not. Like sometimes it can be something you may not have to understand or know about. It's just behind the scenes. And most of us probably can't articulate how SWIFT works, but it's something that is incredibly embedded within the financial system. So I wanted to ask you also about the the work experience you mentioned leading up to Borderless. You mentioned 2019 in your mind as you were on the technical side of some of these things was a really, really exciting season for you thinking forward. And I think you have a ton of wisdom and have seen so many things, battle scars, if you will, of what you mentioned you would have done differently. How would you compare how you feel now, 2024, Q4, going into the new year? You're building this thing by yourself or leading this thing now in the driver's seat. How would you
Definitely
compare how
wouldn't
you
say I'm
feel
building
now
it by
to?
myself. There's
Yeah.
a phenomenal team that really deserves the vast majority of the credit here. I just have the joys of asking the difficult questions sometimes to poke and prod in the right direction.
So what feels different then? Feeling where you are now versus where you were in 2019.
I think, especially when you talked about stablecoins in 2019, there wasn't this lack of local liquidity across different regions. So most of the liquidity for stablecoins, I would argue, was really coming from exchanges. And even exchanges back in 2019 were extremely limited. The prevalence wasn't what it was today. Binance was obviously very popular globally. Coinbase was kind of the leading exchange in the US and was probably much more so challenged back then than it is now by the likes of like the Bitrixes and the Krakens and other people in the world. I'm sure there existed BitMEX would have maybe been leading some things, but these were all the companies that were providing liquidity for stablecoins weren't providing it for payments type use cases whatsoever. They were really providing it as a store of value on exchange because many of them didn't have access to banking rails, or banking rails were really expensive. So that if you wanted to get out of a position that you had in some sort of a token, you were able to take a position in the stablecoin and then kind of like wait for whenever you wanted to take a new position and then go back into a new token. The stablecoin use case back then was extremely speculation and trading driven, like the entire crypto market was. And I think what's changed dramatically over the past few years is, one, the creation of high throughput, low fee blockchains. So whether these are layer 2s in the EVM world, which now I feel like there's hundreds of at this point, but the Polygons and Base and Arbitrum and Optimism, kind of et cetera, or whether it's an L1 that's been around now for a little bit, it's gaining traction like the Solanas of the world, or it's some of the kind of really new emerging chains like the Swees and the Aptoses and those of the world. You now have the ability to do a high throughput amount of transactions at extremely low cost, and that actually allows for kind of payments type settlement globally. And then you have locally licensed and regulated providers like the Bridges, Yellow Cards, Bitsos, etc., that are providing the stablecoin to local fiat currency liquidity in all their different jurisdictions. So to me, those are the two fundamental kind of infrastructure building blocks that didn't exist back in 2019, or at least existed in a way less advanced way in 2019. Now that those exist today, now you actually have the right Lego pieces that you can construct into like a global liquidity network, kind of like a stablecoin VisaNet. And now that you have, that, and humbly, I'm sure others are building it as well, but that's really what we focus on Borderless. Now that you can have this kind of like one counterparty for your global liquidity, now all of a sudden you can start to build, stablecoin-based business banking and stablecoin-based payroll and stablecoin-based repatriation and stablecoin-based consumer remittance and things like that. And I think you can do it in a way which is, one, a lot more accessible than the previous banking infrastructure, two, a lot lower cost, and then three, of course, a lot faster because we're transacting, 24/7 and almost immediately settling chains. And you can start to actually bridge the different real-time payment mechanisms around the world together. So I was having this conversation maybe earlier this week or last week with some folks that had made a lot of investments over time in different real-time payments systems, right? So we have instant SEPA in the EU. You can think about RTP in the US. It's not super well adopted yet, but it is
all government backed.
Exactly. Most regions are starting to, or now have, an instant payment system within their country, or in the case of the EU, like kind of within their economic zones. But none of these payment systems talk to each other. Like there is no way to take a bank account that's connected to instant SEPA in the EU and transfer the funds to a bank account that's connected to RTP in the US in an instant payment. These are all kind of fragmented, closed loop wall gardens that exist across geographies. And stablecoins actually represent a global instant settling payment network. So even if you take the crypto element out and you say, okay, maybe you don't believe that people will hold stablecoins over time, you don't believe that assets will get tokenized on chain, et cetera, fine. If we think about the world, the way the majority of money moves around the world is it moves kind of bank account to bank account. But now using a stablecoin as a settlement mechanism, you can now use stablecoins as a real-time payment mechanism to settle between instant SEPA and RTP as two local real-time payment methods. And you can now start to enable real-time payments across these different payment networks in these various countries. And I think that's incredibly understated at this point and incredibly powerful. Like, people are really still kind of focused on what it means to have stable coins in the end versus some of the connectivity that you can enable and what that means for people in the near term.
Yeah. I want to dive into Borderless specifically on how you all think about where you fit in there, because I think you have a really clear but uniquely differentiated position of where you're going to be sitting in that stack. But I wanted to just ask what your thoughts are just on the last point you said before we dive in there. So from what your stance was, it sounds like you see stablecoins from a, RTP to SEPA, like that's very clear. It's like these two systems, they don't talk to each other. If a business is wanting to move funds in between those two countries, that is still, even though within the country, it might be really real time and quick and instant, doing that across seas is like still pretty expensive and clunky. What would be the bull case, or if you have one, for stable coins within specific jurisdictions? Like if I'm a business, I have most of my business in the US or most of my business only in the EU. Do you see that maybe as a middle to longer term use case for stable coins, and it's going to feel sort of at parity to those existing systems? Or do you see like, specific, I get the whole aggregation play we'll go into globally, but just curious if you have any thoughts on the domestic only side of stablecoins in the near future.
I think in general, you have a lot less use case, especially if you think about domestic as the US, there's a lot less of a use case, right? But the US is also a very privileged country to be sitting in the sense that our currency is if not the global reserve currency, right? And if you're sitting in the EU, the euro is a pretty close, second in terms of stability and power across the world. But if you're sitting somewhere in Argentina, or you're sitting somewhere in like Kenya or some of these kind of emerging or frontier markets, you have a lot more currency risk and currency problems. So there can be a lot of value in kind of those sorts of countries and in those markets for USD or even, I guess, euro-backed stablecoins, not only as remittance and payments mechanisms, but also as a way to store value. So if I'm sitting in Argentina, one of the things that I want to do is I want to dollarize as much of my kind of savings as I humanly can. And as somebody living in Argentina, it can be quite tricky, same, Kenya and, find Southeast Asia, just, similar countries. It can be really difficult for me to kind of open a bank account that lets me natively hold in that bank account dollars, right? If I'm a company, I can get access to multi-currency accounts, assuming that I'm, a big enough business that I have some global banking relationships and things like that. But I'm an individual, it's certainly harder. And if I'm a small business, that's incredibly difficult. Think everybody that's, whose lives are being changed by the creator economy businesses and platforms and things like that. They're effectively small businesses, but they certainly don't have access to enterprise business banking tools. And kind of stable coins are becoming the proxy for holding dollars. And they're kind of becoming this vehicle that's being used around the world to give retail people and to give small businesses access to dollarized savings. And I hope eventually dollarized, other financial products. Can you earn yield through tokenized T-bills once you're holding your balance? There's some stable coins like Mountain Protocol and others that are tackling that problem of how you specifically pass things on. And if you're sitting in a country that has crazy inflation, not only can you now save in dollars to guard against the inflation, you can even earn yield. So your savings go from massively devaluing to actually growing. That's a concept we take entirely for granted sitting in the US that is completely foreign and life-changing to other people in different parts of the world. And that has nothing to do with the cross-border,
That makes total sense. So let's dive then into where Borderless sits in that stack, because again, I think you guys have a really interesting perspective. We now have all of those ingredients, if you will, that you've mentioned that are there. We have that sort of store of value exchange only problem going away. We have these incredibly high throughput networks and blockchains that are launching for specific use cases. Fees are low. And we have folks that you mentioned like Bitso, Bridge, the list goes on, of people that are doing the work in all of these specific corridors and financial geographies to put up and stand up those rails so that we can have people in Argentina, for example, work within their own banking system. They're, in that metaphor we used earlier, they're building the airports on chain, if you will, in all these different places. So where in that context does Borderless sit, and how are you guys thinking about the positioning you have in that stack?
One of the things that's incredibly important to us is to not be competitive with anybody that's in our network or in our product stack. So having built kind of the products and the tech at two, really fast growing and really impactful regulated entities that provided banking to crypto, liquidity. One of the things that was really important to me with Borderless was to be able to be a kind of neutral and democratic network where the incentives are really straightforward and there are no misaligned incentives by like favoring our own liquidity over somebody else's or anything like that. The big problem that we see is this fragmentation, the fragmentation across different geographies through kind of these different companies that are providing local liquidity. The fragmentation of that liquidity over chains. When we talk to the average PSP, they want to move money from point A to point B. They really don't care whether it's Base or Solana or Sui or something else as an underlying blockchain network. And I think what's not really a big issue today, but is getting bigger and bigger, is the fragmentation across stablecoins themselves. So historically, you've kind of had USDC and USDT have been at the forefront of this. Now, given the maybe renewed investments in the stablecoin space, it seems like every week I hear about a new stablecoin launching, whether it's from a fintech titan like PayPal launching PYUSD, or whether it's some sort of a consortium like USDG that was Paxos and Anchorage and Kraken and Robinhood, and I don't remember some other firms as well. There's going to get more and more fragmentation across these different tokens. And just because you have a stablecoin on one end doesn't mean that you have the right stablecoin for the other end. So a great example with the MiCA regulations, and the EU has now become extremely heavy in USDC. LATAM is still extremely heavy in USDT, and you still need some form of interoperability between these different stablecoins, between the different actual blockchain networks that things are riding on, and across all these different geographies. And when we talk to fintechs, there's a lot of fintechs that are trying to build this themselves. And that's, I think, a great problem to solve. When you see people kind of reinventing the wheel over and over and over and over again, that's a great example of something that can be productized and then kind of given as a solution to those folks. And the more people are building this themselves, the more they're realizing not just kind of the upfront costs, but then also the ongoing kind of operational overhead of having to monitor transactions and do reconciliations and all those different things across, 5 to 10 to 15, depending on the global scale of what someone's trying to do. Of all these different, quote unquote banks that they're working with and working across, and how they manage the liquidity across all those different banks. And then since each financial institution only sees a leg of the cross-border transactions and not the entire transaction, that also means that the fintech is kind of on their own for solving around like travel rule compliance and transaction monitoring and some of the compliance pieces as well. And that's, before we even get into the fraud vectors that exist in doing this, and kind of how, the types of fraud data that you need and types of data sharing that you need to be able to do across these FIs in order to kind of bubble up suspicious transaction and to, report bad actors that are trying to make transactions. So we think that there's a massive, massive value in kind of having this global liquidity orchestrated by a single platform that has effectively 3 pillars. The first of which is obvious, which is value transfer. Payments don't happen without value transfer, but then get layered on with compliance and kind of fraud mitigation.
Yeah, it's super interesting. I know once you see it, like once you see it, you're like, oh my gosh, this is genius. But for someone who's listening and they're like, I'm still not it's still not clicking. You're like, maybe I haven't experienced this problem before. I know we've talked. Let's just try to really make it simple. I know we've talked about some, and we've been on calls recently where I think you've done a really good job at this, of like kind of painting the picture of the existing frameworks to think through. We've talked about like what Plaid has done for the world of ACH, like aggregating all those banking rails. Can you share the one you did recently around like the smart order router for trading? I think that's another interesting way to explain the context of Borderless in this specific context.
Yeah, I think that's something that ends up getting really important as the network grows, because coverage is one thing. And obviously we're still early in our journey, so we're still also focused on coverage. But then what you actually need to get to is a point where you have geographic redundancy, right? You can't just have one particular FI that covers a region. And if there's some sort of downtime, whether it be regulatory, compliance, or technical, you have a full outage in that region. Like that doesn't work for mainstream use cases, right? And once you start to have redundant providers and redundant partners within a region, then you can start to kind of the providers can start to bid for the transaction volumes and liquidity. So right now, FX spreads, I would argue, are fairly high across USDC to or stablecoin to local fiat. And one of the things that Borderless is able to do by having a network of lots of partners is it's able to optimize around a few different variables, one of which is kind of FX rate and best price. And I don't think there's really a fully cemented concept of best execution yet across stablecoin based payments, but it's something that Borderless certainly wants to champion. And we can say, okay, this transaction can be filled by these three financial institutions on the network. Great. Give me the real-time rates from those three financial institutions. And then Borderless is going to route it to the one that's going to get the business or the consumer the most money for their payments at the end of the day. And when you have single providers, there's no way to do that. You can't create that incentive system. But when you bid for flow, basically, and this is a pretty common system in most markets where you have like a smart order router that sits on top of a bunch of liquidity providers and routes the order to the best venue at that time. We can build something very similar for stablecoin based payments. And if we can start to get people, a percent, and in some cases, actually, it's more that we're seeing more money at the end of the day for their transaction, those things start to make giant differences.
Yeah. So it's really two things. It's the build of what it would take for a fintech who, as you mentioned, that might not be their core competency, is building all of this connectivity across all these different, order routing destinations. They really just want to, run and grow their business at the core, whether it's a payroll or payouts or payments platform. So it's the build of what it is. Like historically, you've had to take all those separate pieces, intuitively connect them together, which takes a ton of engineering resources, time, expertise. That in and of itself is in some ways a business that you've identified could just be a single API. But then it's also the volume-based benefits you get if you do that as a service, because you're able to have all of these redundancies and efficiency with routing, and you're able to provide really a guaranteed best execution price, as you're saying. So what are you seeing for you as you look forward? For me, from my standpoint, talking with a lot of these payments companies and people who are realizing now, oh my gosh, we need to enter the space for the first time. Some of these companies like Revolut or PayPal, or these businesses that even in your early journey were really fundamental in innovating with payments and helping solve for things. What would the message be to companies that might be listening to this who are thinking about getting started? What can Borderless specifically add value to them in that journey? What are you solving for them? How would you communicate the core value of the platform to that person?
At the end of the day, especially for people who are just getting started, who haven't thought about how the liquidity and the actual money movement is going to work at the end of the day. So people who are focused on building like banking features, or focused on building payroll features, or working on, kind of optimizing their UX and things of that nature. Borderless basically handles all of the fiat kind of connectivity and transfers around the world. So if you're building an app, and I was talking to a founder yesterday who is building an app to help specifically kind of African immigrants in the US and EU and other markets send money back home to like Kenya and other countries there. And kind of the light bulb moment that went out is like, wait a minute, I don't need to figure out how to do all these different collections and how this financial money movement works in all these different countries. I can just use Borderless, and then I can focus on like building the right remittance tools. And I can focus on my user acquisition, and I can focus on how we're doing our marketing strategies, and I can focus on how we differentiate from Wise. And I don't need to think of the, kind of like back office, how does the money actually move and doesn't move in a compliant manner, et cetera, et cetera. I can just focus on what makes my business different from like Wise and Remitly and others. And that was a kind of a great eye-opening moment that was kind of exciting to witness, firsthand over coffee.
It's awesome. So you're feeling like momentum is building. You guys are early in the journey, but growing quick. What is next for Borderless as you guys grow? What are some key milestones or goals that you have?
For us right now, it's about having more coverage globally. So we have coverage across our liquidity across the US, across EU, across LATAM, across Africa. Southeast Asia is certainly top of mind at the moment. And then starting to build this redundancy is really important, because not only does that increase the reliability, but that also then sets the foundation for a lot of this optimization stuff that we want to build that we think is really valuable.
There's so much more that we can probably dive into, but we'll probably just have to do a part 2 of this sometime.
Fair enough.
Before we wrap up, let me just wrap it. This has been really fun, man. I love what you're building, and a couple rapid fire questions for you.
Go for it.
Okay, so give me one word that describes the future of stablecoins post US election.
I'm going to say resilient. And I'm going to say that word because I actually think we're past the inflection point now, where certainly policy is helpful in accelerating the growth, but the policy isn't going to drive whether stablecoins get adoption or not. We're now past the point where this change in the world is happening, and it can be accelerated or it can be slowed down, but it's now resilient enough that the future is coming regardless of elections and particular politicians.
What industry in the near future, like today, is the most exciting from a stablecoin use case, in your opinion, on Borderless? Like you've mentioned, there are a lot of different use cases. If you go to your website, you'll see probably 8 different ones. Which one specifically, if you could really provide the most value to, which one seems most like product market fit at this point?
The one that I'm personally most excited about is emerging markets consumer remittance, because that's where you have more of an impact on the people. If someone's now able to get 5% more money at the end of a transfer, that can make a really big difference for the individual and their quality of life. And now they can have dollarized savings. We touched on some of that stuff. At the end of the day, Borderless is a for-profit business. So just because I do think consumer remittance is also a profitable category, it's the one that also gives me the warmest kind of feelings. I think where a lot of value is going to accrue is in repatriation. It's businesses bringing funds back to the US and EU from their subsidiaries that operate in these emerging markets. That's where using stablecoins is able to kind of get them out of the high risk local currencies much faster, and is able to do kind of these real time transfers back into their core corporate treasuries. That's the more boring answer.
That's awesome. I don't find it boring, but maybe that's why I'm doing this for my focus now. What is outside of Borderless, a company or innovator or founder that you are paying close attention to in the space that's building within stablecoins that you really think is doing good work?
That's an interesting one. I'm going to piss a lot of people off by not picking them.
You can pick 2 if that makes it easier.
This is a very political answer. I feel like I'm on the debate stage here. I'm going to use one that is perhaps slightly more personal. I really, really like what Dakota is building and what Ryan's doing with Dakota. I've always thought that there needs to be some sort of a quote unquote business bank that's stablecoin based and allows for kind of instant global remittance. One of our biggest frustrations with the company is that we power a lot of these sorts of things, yet we ourselves don't use it internally as much as we should, because we're this liquidity layer and we're missing the UI for the finance team, and we're missing kind of the bank account wrappers and functionalities and things like that. So as much as we move money around the world in stablecoins, like we pay for our insurance by sending a wire through Swift. And that just really, really pisses me off on a daily basis. And Dakota is building kind of the perfect business banking platform that would enable, our team internally and our finance team and our accounting team to start to operate in a stablecoin world. And that's incredibly personally exciting.
Yeah.
But I will give the political answer that I will caveat that with there's a tremendous amount of innovation that's happening everywhere across the stack. And if we had another 30 minutes, I would sit here and I would list all of the Borderless customers and partners and talk about how excited I am about all.
Yeah. No, Ryan's great. I actually just got my Dakota account set up yesterday for Stable Studios. So I'm excited to get my hands on that thing. All right, last question. This is another kind of tricky one, but curious. What is something that you see maybe in the world of stable coins right now that people might be really, really excited about? It's shiny and, there's a lot of buzz around it that you think might perhaps just be fleeting or not that important when we think about it middle to longer term.
Good one. I think everything is overhyped, honestly, at the moment. Kind of after the Stripe acquisition of Bridge, it seems like there's a tremendous amount of what I refer to as stablecoin tourists, whether they're founders, whether they're VCs, whether they're kind of corporate partners or even payments companies who now all of a sudden stablecoins is the core focus of everything that they do. And stablecoins wasn't a word in their vocabulary 6 weeks ago. That's incredibly tiring. And I'm looking forward for that to come to an end and for all the, trend chasers to go chase some AI thing again instead of chasing stablecoins.
So you feel like some of the people who are asking these questions involved in this, they might just be sort of like, they're not the diamond hands, if you will. Like they're kind of just here temporarily, but probably are fleeting potentially.
Yeah. Stablecoins are now hot, which means all the trend chasers are talking about stablecoins. 3 months from now, something else will be hot. They'll all be gone. And then we get to go back to really building properly again without all those distractions.
What would you say to that person or that maybe innocent trend chaser who might be listening to this right now? Like, what would you say to that person who's interested but may not be fully bought in?
I think you've got to come to your own thesis around the space. And if you can come to your own thesis that you have some conviction about, then it's time to get serious. I think there's nothing wrong with evaluating trends, right? What rubs me the wrong way is all of these 6-week-old quote unquote stablecoin experts. Like that's really frustrating. Those are the people who are kind of, grifting and consulting and other things like that based off of, the popularity of the space. But that does nothing against people who are, genuinely curious. Genuine curiosity is always welcome. And, any sort of thesis, whether I agree or disagree with it, if you have a strong conviction about it, that's certainly always welcome. I'm just tired of people who didn't know what stablecoins were 6 weeks ago now, invoicing themselves as stablecoin expert consultants and kind of taking people for a ride.
Yeah,
that's sad to me.
Hopefully this brand can be hopefully a breath of fresh air for those people to come in and see what's really going on. All right. Any final thoughts, last things you want to leave the audience with about you, Borderless, how you're thinking about the future?
I'm incredibly excited to start to power a lot of these stablecoin based, use cases. I really think as an entrepreneur, it's so easy to get distracted by trying to build too many things. And the vast majority of really successful companies are that way because they are the best in the world at one or two things. And I think right now, one of the things that's missing, one of the reasons we decided to create Borderless was to kind of enable founders who wanted to build on top of stablecoins to be the best in the world at one or two things and not get distracted or not have to split resources or allocate them to solving this liquidity problem on top of, the value proposition that they're bringing to the market.
It's a perfect place to end. This was fun, Kevin. Thank you for the time. And we'll have to do it again. There's way more to talk about. So we'll run it back sometime.
Sounds good. Thanks.